Hello and welcome to financialspreadbet.com. My name is Stu Wisson, and in this article we're going to talk about trading versus investing. Trading and investing are sometimes seen as one and the same thing, but in fact they're both very different aspects of financial trading that are cut from the same cloth in terms of making money from the financial markets, but have very different methods. Yet it is a common misconception that trading and investing are the same thing, whereas in fact this could not be further from the truth, as we will discover. First, let's discuss what the point of both trading and investing is. The primary goal from both of these is to make money. This is the goal, pure and simple. Now, how they both go about this is somewhat different. Investing, however, usually takes a longer-term view, with potential profit that is very measured and based on fundamental data. Now, we have an article written about fundamental analysis if you're interested. And it can be involved in anything from financial markets to property, wine, art, in fact anything. Whereas trading is more speculative, and 99% of the time is short-term and based heavily in the financial markets. The analysis is usually technical. Again, I have an article written on technical analysis. And the potential profit, although calculated, is far from guaranteed, and there is a far greater risk of loss. What then could you say are the advantages of trading or investing? Well, they both have many advantages and disadvantages. In fact, it has to be said that it's good advice to have at least some form of long-term, more secure and calculated investment, regardless of whether you're a trader or not. You do not place all your eggs in one basket and hope that they all hatch to be golden egg-laying fluffy things. Certainly with trading, the rewards are certainly there, but as any trader, new and old alike, will attest, they are not without a great deal of risk. Investing provides a measured, somewhat secured, longer-term financial gain in the markets that are very diverse and provide some degree, at least, in the longer term of protection against inflation and eventual possible financial gain. Trading really, in a nutshell, is the method of using technical tools and other forms of analysis to judge whether a price movement in the financial markets is likely to continue or change in its current direction, and what, if any, are the best ways to take advantage of that for your own profit. Now, by using your skill and judgment, you will be able to assess the best point of entry, your exit, and your projected profit from that. Most of the time, trades are usually short-term by nature and require a good amount of monitoring, adjustment, and analysis to gauge whether the trade is on track for target or reaching a point of acceptable loss based on your money management plan. There is potential for very quick gain, inasmuch as there is potential for equally quick loss. Nearly all trading is leveraged, meaning that the amount staked in a trade is geared heavily against small movements in the actual underlying market, resulting in a small movement on the market could result or would result in a larger movement, positive or negative, on your trading position taken. Now, investing usually 99% of the time requires the need for a longer-term view to remain positive in outcome. In other words, the investment needs to grow in value, regardless of what the investment is. Whereas with trading, certainly with derivatives, it does not matter whether the market is going up, bullish, or going down, bearish, as you can buy into the market with the expectation of it going up in value, going long, or sell the market with the expectation of it going down in value, going short. For traders, it's not about what they are trading ultimately. It's about finding a derivative that has an underlying that provides the opportunity to make a short-term profit, regardless of whether it is going up or down in value. You can read about other articles. You can read more about that in other articles I've written about derivatives. What it really comes down to is what is right for you. We are all, of course, very different. Otherwise, the world would be a very boring place, as we all know. Yet when it comes to whether to trade, as we basically all should invest to a greater rather than lesser degree, the option to trade really comes down to who you are as a person. You see, trading is not for everyone, yet many believe they could possibly do it. Certainly lately, with the news showing traders making huge gains and subsequent losses, it does lead to the opinion that anyone could trade and do the former and hopefully not leave with the latter. In fact, personally, I do believe that some of these so-called professional traders should not actually trade at all, simply because they do not have the mental makeup to trade. Now, from experience of knowing and training younger traders over the years, it is these young guns that worry me the most, as they tend to be attracted to the money, which we all are, of course, but also these see trading as a lifestyle, which again it can be, but one in which these young guys, and they are usually guys, tend to have a twisted, inaccurate view of what a successful trader is. Their views are of the common misconception that traders wallow about in wine bars, getting drunk, running up huge bills and driving fast cars all over the place. Also acting in a similar gun-ho attitude to trading as well. Now, I've always thought that anyone that is trading with other people's money, whether that's clients, banks or otherwise, should not be allowed to trade until they are 35. Till then, they trade virtually, learn the markets, do their analysis, learn, develop, and mentored and paid a basic wage. Then, at the age of 35, they are allowed gradual limited access to trading funds. I know this sounds really way out there and many would disagree with me. However, most of the trading mistakes and losses accounted for, I am sure, are because of lack of skill, analysis, and respect for the markets, and maturity, which all come about with age and experience. The best traders that I have trained over the years have all been over 50, and not trading with money that they rely on, and are more willing to learn, understand, develop, and to look at the longer view. Also, most of them are women as well. I digress a little there, but the point that I was labouring is that there are some people that are more mentally adept at trading than others. It's not about intelligence or what degrees you hold. And it's not about your mental ability and makeup to deal with the view of trading as a business. Sorry, it is about your mental ability and makeup to deal with, to look at trading as a business. That it's not about immediate short-term gain. It's about making sure your gains overall are greater than your losses. It's making sure that you continue to learn, develop, and grow. That when you're not well or stressed, you do not trade. It's about understanding yourself as a person and your mental makeup. Are you someone that reacts calmly to bad situations? Are you someone that has an eye for detail? Are you someone that can see the big picture? Are you someone that either runs or would like to run their own business? Are you someone that can be committed to something even when it's not going his or her way? There are many questions you should ask yourself as to whether you should look to learn to trade. Note that I say learn to trade first. This is by far the first step that you should take. What I do find alarming is the amount of people that come to me after they have already started trading and are making losses. It's good that they realize, and of course they can be directed. Usually my first bit of advice there is to stop trading and learn first. So if you're new to trading and want to learn more, you can learn a great deal from the ever-increasing articles and the free course on this website. Do that first. Open a demo account, learn, grow, develop, and see if this is for you way before you decide to put any of your hard-earned money